This is Al Brooks, and this module in my price action trading course has to do with micro channels. A micro trend line, first of all, is any trend line on any time frame that you can draw across from 2 to about 10 bars, where most of the bars touch or are close to the trend line. Usually the bars are relatively small. And once you draw the micro trend line, you can create a parallel and put it on the opposite side of the bars to create a micro channel. The channel is very, very tight. In the old days, 20 years ago, people used to refer to it as a sign of a program trade taking place. You really just use the trend line. You don't have to draw the second line, because the trading takes place based on the trend line. You don't have to have two lines down there to trade. When you have a bull micro channel, it's a sign of buying pressure. As I said, years ago, people used to say that a buy program was going on whenever they would see a micro channel on the chart. A micro channel, the hallmark of a micro channel is no pullbacks. The bars keep going up, and the low of the current bar does not fall below the low of the prior bar. In a bear micro channel, it's a sign of selling pressure. Again, no pullbacks. The channel keeps going down, and the current bar does not go above the high of the prior bar. Once it does, the channel has ended. It can still be a tight channel, but I no longer use the term micro channel once pullbacks begin. Unlike a conventional channel where pullbacks are common, a micro channel progresses with no pullbacks. Sometimes you'll get one pullback and then the micro channel will continue for another 5 or 10 bars. You can call it back-to-back micro channels, or you can call it one very big micro channel, or you can call it an extremely tight channel. It doesn't matter what you call it, as long as you understand that it's a sign of very strong trending price action. How do you trade them? It depends on where they're occurring. Both bull and bear micro channels can occur in both bull and bear trends, and both can have breakouts to the upside or the downside. A bull micro channel and a bear trend, it's an attempt to reverse. And since it's a bear trend and most reversal attempts fail, the bull micro channel should become a bear flag and the reversal attempt should fail. And it sets up a low one sell setup. So you place a limit order to sell below the low of the prior bar. As the channel continues up, at some point a bar will trade below the low of the prior bar, and that will trigger the short, and you'll be short. For example, here's a bear trend, and we have a bull micro channel. You can draw a tight trend line low across the lows of the bars. You don't have to draw the trend channel line on top. You can see that it's a channel and that it's very tight. And because there are no pullbacks for 4 bars, it's a micro channel. You keep placing sell stops one tick below the low of the prior bar, and you would have been filled on this bar. It's also a low one sell signal. It's a pullback in a bull trend, and it's the first pullback. You can also say, well, Al, it's a double top over here, so it's a low 2. That's correct. So you can call it a low 2 or a low 1. In a strong bear trend, you sell the first bear breakout of a bull microchannel. In a weak bear trend, you're usually better off waiting for a second entry, which would be in the form of a low 2 or a triangle. You wait to short the pullback from the breakout of the bear microchannel, of the bull microchannel in the bear trend. So, for example, this bear trend is not nearly as strong as the prior one, so I would call it a weaker bear trend. And here you have 3 pretty strong bull bars. I would not take the short below this microchannel. I instead would wait for the breakout, wait for the pullback, and then short below the pullback. Yes, the pullback went to a higher high, but that's common. On a smaller time frame chart, this would be a higher high major trend reversal. So when I have a weaker bear trend and then a bull microchannel, I do not short the low one, the first breakout. I wait and sell the second reversal down, which is a low 2 sell setup. Here's another tight channel, not so much a micro channel, and again I would wait for the second signal. Overall, this is a larger low 2 setup, so we have a low 1, low 2, low 1, low 2, but we also have a large leg up and a large leg up, so this is a larger low 1 and a larger low 2. Also, it's a double top, and all double tops are low 2s. It's also a low 4. Low 1, low 2, low 3, low 4. It doesn't matter what you call it. You simply have to recognize that it's a reasonable sell setup. A bear microchannel and a bear trend. The bull breakout is a reversal attempt. Reversal attempts should fail in strong trends. Here we have a bear trend. So you sell above the high of the prior bar. And you can also sell below the low of the pullback. So since it's a bear trend, you have to be looking for reasons to get short. So for example, we have a gap down, which is a spike, a pullback to the moving average, and now we have a bear microchannel and a bear trend. We have a pullback and went above the high of the prior bar, so you can place a sell stop to go short below that bar or even below the outside down bar. However, since it's a bear trend and you're looking to get short, you can also place a limit order to go short above the high of the prior bar once you start to see a bear microchannel. A bear microchannel and a bull trend. Okay, you have a bull trend and a bear microchannel. It's a reversal attempt, right? So you have the trend going up, and then you have a bear microchannel. So it's an attempt to reverse the market, and it should fail. So it should become a bull flag, and it's a reasonable high 1 buy setup. So you buy above the high of the prior bar. So here you have a very strong breakout, a bull trend, and there are no pullbacks. So it's a bull microchannel. Here the market went below the low of the prior bar, so we have a breakout below the microchannel. It sets up a high 1 buy setup, so you can buy above the high of the prior bar. In fact, this is a trend from the open bull, and it went up for 6 consecutive bars. Usually you can just place a limit order to buy at 1 tick below the prior bar. So you can place a limit order to buy below this bar. You would have been filled here. You can place a buy stop to buy 1 tick above the high of this bar because it's a 3-bar bear microchannel and a bull trend. So you can buy that. Here's a 4-bar bear microchannel, still in a bull trend. So you can buy 1 tick above the high of the prior bar. You can call it a high 1. You can call this a high 1. However, here's a double bottom. All double bottoms are high 2 buy setups, so this is also a high 2. You can buy above the high of the prior bar based on the bear microchannel. You can buy above the high of the bull bar because in general it's better to buy above bull bars. Or you can wait for this breakout and then we have a pullback and you can buy above the high of the pullback bar, especially since it has a bull body. 3 pushes down, 1, 2, 3. So this is also effectively a triangle in a bull trend, and you have a bull signal bar. So you could buy above the high of this for a triangle buy setup as well. So if you have a bull trend and a bull microchannel in the bull trend, any bear breakout is an attempt to reverse the bull trend, and a reversal attempt should fail in a strong trend. So you buy at the low of the prior bar, and you also buy above the high of the pullback, a 1-bar bull flag, a high 1 buy. For example, we have an opening reversal and then a very strong bull spike, and we have about 8 consecutive bars without a pullback. So it's a bull microchannel, and it's a clear, strong bull trend. We have these strong breakout bars. So you have to be looking to buy. You can place a limit order to buy at the bottom of the prior bar. You would have been filled here. And here we have a breakout below the bull microchannel. You can also call this a bull spike or a bull breakout. It's also a bull microchannel because there are no pullbacks. We have 8 bars without a pullback. So here we have the first pullback. We drop down for 2 bars. It's a high 1 buy setup. You can place a buy stop above the high of the prior bar, and you would have been filled up here. So it's a small bull flag. Suppose you have a weak bull trend, in other words, a bull channel, and within that weak bull trend you have a bear microchannel. In general, it's better to wait for a second entry, like a high 2 or a triangle. So, or you can wait for the breakout and then buy the pullback. Here we have a strong bull trend and we have a pullback. So it's a buy below and a buy above. Now we're immediately getting another pullback, so this might be a small final flag and we might be entering a trading range. So it's no longer as strong a bull trend. We have a bear microchannel. Should you buy it? You might be able to buy it on the basis of it being a double bottom for a scalp. You could also choose to wait and take the second entry. So we have the breakout, we have a pullback, and a second entry. You could buy above the high of this doji bar. In general, when the picture starts to become less clear, more trading range behavior, it's better to be buying above the high of a bull bar. So I would buy 1 tick above the high of this bull bar. So again, a bear microchannel that in a market that might be transitioning into a trading range, better to wait for a second signal here. Pretty good bull breakout, 2 very strong bull bars, and then another bear microchannel. You have an II, an inside bar, and a second inside bar. Both have bull bodies. It's near the bottom of the trading range. You could buy it on that basis. You could also argue a double bottom and in a bull trend and buy it on that basis. Or you could even buy above here. We have 4 bars up, a breakout from a large high 2, 2 legs down, large double bottom, and you can buy above this bar as a pullback from the breakout of the large high 2. A bull microchannel depends on context. For example, you have a very strong bear spike here, and now you have a pretty strong bull microchannel. The bars are small, the bodies are small. You probably can short the breakout. If you're not sure, wait to short the pullback, the second entry. So we have a bear breakout of a bull microchannel and probably a bear trend. Unclear? Don't take the first one, wait for the second one. It's also a double top, so it's a low 2 short. Again, context. We have a bear trend, a trend line break, and then a lower low in the form of a wedge bottom, 3 pushes down, 1, 2, 3, and a possible reversal up and a lower low major trend reversal. So we have a bear trend, a trend line break that is pretty strong, and then we gradually drifted down to a lower low where we have a pretty decent reversal bar and 3 pushes down, a wedge bottom. So this could be a pretty good major trend reversal. Now we have 6 consecutive bull bodies on the reversal up in a microchannel. No pullbacks, so it's a microchannel. You can argue it's a bear flag in a trading range. At this point, it is a trading range, but it's also the start of a bull trend. So here we have a bull microchannel, potentially a bear flag in a trading range, but the market probably has flipped to always in long, so I would not take that short. I think it's a reasonable buy actually below the low of this bar and above the high of this bar. In here, maybe by here, traders believed that the market was always in long, so at this point you're looking for reasons to buy, and you'd expect there to be buyers below the low of the prior bar, so I would not short that. I would be buying at its low and above the high of this high 1. Again, a bull microchannel. in a trading range, but also in a new bull trend, a low major trend reversal, and a pretty strong move up. At this point, the market is bullish. Here we have a very strong bull bar closing on its high, the biggest bull bar in the entire rally. We're approaching the top of the trading range. You could buy this close, or you could wait and buy this close, and you could buy this close as well. In the module on breakouts, I talk about how to manage these trades, how to place stops, and how to go for profit targets. That is the end of the module on microchannels.